Hi, my name is Ophir Gabe, bringing you another QuickBooks accounting tutorial, and today I wanted to discuss how to set up a periodic inventory management system in QuickBooks Online. And just to give you a brief overview of what periodic inventory is, it's basically keeping track of your inventory and cost of goods sold on a per period basis, as opposed to perpetual inventory where you're expensing or you're finding out your cost of goods sold per sale. So the first step we're going to want to do, and periodic basis meaning you're going to do a physical inventory count either monthly, quarterly, yearly, whatever period you choose. We're basically going to be, throughout the period, we're going to be recording our purchases, and then at the end of the period that you choose, you're going to be doing a physical inventory count to calculate our cost of goods sold. And we're going to be going over all of that in detail in this video, so just stay tuned. The first step we're going to want to do is we're going to want to create an inventory type asset account. And you do that by clicking the gear icon, going into your chart of accounts under the settings column, and then we're going to want to click new, and the category type is going to be other current asset, detail type inventory, name we're going to call it purchased inventory, and save. Okay, great. This is going to be the account where we're going to record all our vendor purchases for our inventory. The next step would be to actually enter in our item list, our products that we're going to be selling. So click the gear icon, and under the list column, click products and services. We're going to want to click new, and let's assume that we're selling widgets. We're going to call it widgets. It's very important that you're not tracking quantity on hand, because that's not what we're doing in a periodic system. So you leave that checkbox unchecked. Sales information, yes, we're selling this product. You can enter a price. Let's just say we're selling it for $50. And you choose your income account that you want all your sales to be recorded in. That's where you could select any type of income account that you choose. We're going to select sales of product income for this demonstration. And yes, we are going to be purchasing this widgets item to resell. And we're going to assume that we're purchasing it for $15. Now, very important, this expense account, we're going to want to direct it to the other current asset type of account that we just created, our inventory, purchased inventory account. Okay, so that's how you create our non-inventory product that we're going to be selling. Save and close. Great. This looks good. Okay, the next step is, in the course of our operations, we're going to be buying and selling this inventory. So let's just assume that we bought some from our vendor and he invoiced us. We bought some from ABC Supplier, our vendor, and for demonstration purposes, let's assume that we bought it last year. So 12/31/14. We bought widgets, and we bought 100 of them. at a rate of $15, totaling $1,500. So I'm going to have an Excel spreadsheet here where we're going to keep track of our transactions. I think this is going to be easier to demonstrate what exactly is going on, because I really want you to understand the concept behind keeping track of inventory on a periodic basis. So let's just have our date here, 12/31/14, and we bought 100. Actually, let me have some headings here to make it easier for you. So date, quantity, price, cost, total value. So our cost was $15, and total value is going to be just our cost times our quantity, $1,500. Let's make this a little prettier. Okay, great. So far this is what we have, and let's save and close this bill, and let's open up our balance sheet just to show you that this is what's going on. And just a quick note, you'll see that this is the balance sheet as of the 31st of 2015. Even though we bought this inventory last year on 12/31/15, it's still in there because the balance sheet is a snapshot of the cumulative transactions that occur in your company. I have another video on analyzing a balance sheet. You could check that out if you want more details about looking at your balance sheet. Okay, so we have $1,500 in AP because we owe our vendor $1,500 for the widgets that we bought, and then we have $1,500 in our inventory. Okay, it looks good. Now, let's just assume that we bought more inventory sometime in January. So cool thing about QuickBooks Online is that we could duplicate this window so that we can always refer back to our balance sheet without having to create the report again. So let's go into our quick create screen, and we bought more inventory in January. So we go to another invoice, and the same supplier, we bought some more widgets, and I guess it's set up to automatically include these dates, but I want to change this up a little bit. We bought widgets, right? Let's assume that we bought 35 of them. Okay, let's bring out our Excel spreadsheet and record this just so you can see what's going on. So on the 31st of, oops, let me change this date. Okay, so on the 31st of 2015, we bought 35 widgets for $15 for a total of $525. Okay. So our total inventory, the cool thing about Excel, if you guys didn't know this, is you could select different amounts, and then if you look down here, it's going to give you the total sum of those amounts. But so if we select our inventory totals, we should have $2,025 in our inventory on our balance sheet. So let's quickly refresh this just to make sure. Oh, I don't think we saved the bill. Okay. Save and close. Let's try that again. Let's refresh. And you'll see the $2,025 in there. Perfect. Now let's start selling some of these widgets, because so far we've been buying some, but we haven't sold any yet. So let's sell some widgets. Click the Quick Create icon. I'm sure you already know how to do this, but go to Invoice. We're invoicing our customer A, and we're going to invoice him sometime in January also. Let's assume that we on the same day we bought the 35, we sold 65, let's just say. Oops, what am I doing? 65 we sold. Okay, great. We sold it for $50 each. We have a nice profit. And let's record it in our Excel spreadsheet. So let's just, we're assuming on the 15th we sold 65, so I'm putting a minus 65 for $50, but we're looking at it from a cost perspective. So we sold this is what it cost us to sell these widgets. Okay. So our cost of goods sold should be $975, right? Now, we're going to want to book this $975, but let's just assume that we're running our periodic basis monthly. A lot of companies do it yearly, but let's just assume that we're doing it monthly. And we did our inventory count on 131, and what's going to be our inventory amount that's in a warehouse? It's going to be the 135 units minus the 65. And if, again, let's just do a sum formula here. Equals, just make sure that it's highlighting the right amounts that you want to calculate, and press enter. And let's make this stand out. We're going to bold it and use some borders, and then let's copy this over. Okay, great. Costs, we don't really need the sum for that. But the total value, this is correct. This is what our inventory value should be at the end of this period. So let me go into how we're going to record the journal entry to record cost of goods sold. Let's save and close this. And then we'll look at our balance sheet. And you'll see that the changes that occurred are, we now have $3,250 in accounts receivable, and that's for the 65 widgets that we sold. But our purchased inventory hasn't changed. It still reflects the $2,025 worth of inventory, even though we sold 65 widgets. So this is where we have to record our journal entry. And let me just open up, well, I'll open up a profit and loss statement also, so you guys can see the full picture of what's going on. and we'll run it for this year to date. Okay, so we have our $3,250 worth of income, and as for the 65 widgets that we sold to customer A, but we don't have any cost of goods sold. This is not accurate because we didn't really make all this money. We had to pay for some inventory. All right, so we have to record our cost of goods sold. Let's duplicate this tab again. And this is so cool about QuickBooks Online. Look, in this tab we have our profit and loss, and then we have our balance sheet here that we could quickly refer to. Okay. So, the next step, if we look at our Excel spreadsheet, right now this is the amount, just these two purchases. This is the amount that we have in our inventory, 2025, but as we already discussed, this is the amount that should be in our inventory. So, let me just go over the equation for periodic inventory, and that's beginning inventory plus purchases minus ending inventory, and this is our ending inventory, equals cost of goods sold. And this is essentially, this is going to be our cost of goods sold. But we don't know this yet. We're assuming that we're having a lot of sales and so on. So we don't, and we're not keeping track of these individual sales. This is the number that we need to calculate. So how do we get that without having this Excel spreadsheet? And the answer is you have to do a physical inventory count. So let's assume that we're accounting inventory on a monthly basis, and we go in there on the 31st of January after we sold our products for the day, and we count our inventory, and we calculate that our inventory is 70. We have 70 widgets on hand. Okay, perfect. So we know what's left over in our warehouse. We know what we started off with, and we know our purchases, how much we purchased in the period. So we simply have to do our beginning inventory, 100, minus, plus purchases, minus our ending inventory, the 70. And then we're going to get our cost of goods sold. So again, we're just, just to give you an example, this is our beginning inventory, right? Let me just delete this. This is our purchases. And this is our ending inventory. It's not a negative. It's our ending inventory is 70, but I'm putting it in as a negative because that's our formula. Let me just type out the formula. Remember, you just have to remember this: beginning inventory plus purchases minus ending inventory equals cost of goods sold. Okay, so that's why I put the ending inventory in there as a minus sign, because we're subtracting it here, and Actually, I could leave it as a plus sign, and then we'll just we'll do the formula here. It's going to be beginning plus purchases minus ending inventory. So 65 is our quantity on hand at the end, and our cost was 15. So our total value is, let's do alt equals, I mean, we're multiplying, so alt equals quantity times cost, 975. So that's just a couple quick ways of calculating our cost of goods sold. So this is cost of goods sold. All right, great. So now we need to record this. And you're gonna have your journal entry. To enter it, you press the quick create icon under other, click on journal entry, and then you're gonna want to date it on the date of the count. So we're assuming that we counted it on the 31st of January, and the entry is going to be cost of goods sold, and we're going to debit that for the amount. And if we open up our Excel, we calculated our amount is 975. So credit that. You can enter your description. This is periodic inventory. You could use any description that you feel comfortable with. Cost of goods sold, adjustment. That's just what I'm going to use. And then the other account is going to be our purchased inventory account. And we're going to subtract the 975 from there. So essentially we're moving items from our warehouse to sales, the cost of goods sold. So let's close this out. Save and close. So again, let me just open that up again, because this is the key. And we're going to be debiting cost of goods sold and crediting the purchased inventory account. Okay. So now, if we refresh this, press F5 to refresh, you'll see that now we have cost of goods sold and we have our accurate net income. And if we refresh the balance sheet, you'll find that we no longer have the 2025, we now have 1050 left over. Okay, that's how you take care of periodic inventory. Everything is recorded, so you can watch it over as much times as you like, just to get a better idea. And you really just have to start implementing it, because QuickBooks is all about repetition. That's the way you're going to learn. You're going to have to use this in your business. And I know in the beginning it might seem daunting to learn all of this stuff, but believe me, you'll get it. If you have any additional questions or you need any one-on-one training, I'm always available. Please give me a call. My number is 954-358-9487. And like this video if you found it useful, and subscribe to my channels for my YouTube channel for more videos in the future. And you could also leave comments on the videos if you have any quick questions. All right, that's it. Hope you have a nice day, and thank you for watching.